Okay, year 11. Now I'm just going to do a quick recap of what we did last session. So we did the cash receipts and cash payments journal. I'm just going to go through some theory part. Maybe that's going to make it more clearer. Okay. Now recording the cash flow. So again, I said as before, so we've collected the data. Now we're going to record the data. Okay. And then I'm going to show you at the end of this video how do we report the data as well from cash receipts and cash payments journals. Okay. Now with recording the cash flows, so inflow, cash flow can be cash inflow and outflow. Inflow is when your money is coming in, and outflow is when you're paying the money. Your money is going out of your pocket. Okay. Now the most common transactions for many small business owners involve cash. Okay, so small businesses, they might receive money in cash and they might pay for the goods that they purchase in cash. Okay, receipts of cash are essential for the survival of many businesses. So again, receipts of cash means the source documents. Okay, cash payments are also quite common in a day-to-day operations of the business. Okay, so cash receipts and cash payments. In a single entry accounting system, we therefore normally use two journals on a daily basis: cash receipts and cash payments journal. Okay, so this is for small businesses. As I said in my last video, the owners that do not have much information about accounting processes, even they can use this system of accounting. This is called the single entry system of accounting. Okay. Now regarding the cash receipts, so someone asked me last week a question that what is the difference between cash receipts and cash payments journal. Okay, now a business may have many different types of cash receipts. Okay, cash receipts means when the money is coming in. Okay, when if you are a business owner, when you get the money. Okay, these may include some of the following items. So cash from selling goods. If a business is selling goods, they're getting money in return for those goods. Okay, interest received. So they're getting interest on the money deposited in bank. Okay, selling old assets. So when you're selling something, you're having the cash inflow, which is your cash inflow. So this is your cash receipt. Collecting money from accounts receivable. So accounts receivable again, the customers whom you give the goods on credit. So when you get the money from them, it's called the collecting money from accounts receivable. They are also called your debtors. Okay, cash from providing services, loans taken out, capital contributions. So they are all your cash inflows, which means cash receipts. Money is coming into your bank account. Okay. Now cash payments. So when you are paying money from your business. Okay, a business may also have a variety of cash payments. These may include buying goods for cash. So okay, when you purchase the goods to be able to sell your business. So when you're buying some goods to be able to survive in your business, that is when you're paying the money. Okay, paying interest on loans. So when you take out loan from banks, you pay interest on them. So this is your cash outflow. Okay, it is called the cash payments. So remember one thing, when money is coming in your pocket, it is called the cash inflow and it is called the cash receipts. When the money is going out of your pocket, it's called the cash payments. Okay, it's recorded in the cash payments journal. Buying new assets, you're paying money. Paying cash to accounts payable. Accounts payable again, when you're purchasing goods on credit, so you're paying the money later on. So accounts payable is your creditors. Okay, paying expenses, repaying loan, cash withdrawals, they are all your cash payments and they go under your cash payments journal. Now I'm not going to go through designing cash journals. I might do another video of just a quick examples of a couple of questions that you might have. So I'm going to skip this slide for now. Okay, now I'm going to come through reporting cash flows. Okay, this is really important. So we've collected the data, we have recorded the data into cash receipts and cash payments journal, and now we're going to report the cash flows. Okay, having recorded cash flows on a daily basis in the two cash journals. Okay, so cash receipts and cash payments journal, it is important to report on cash flows from time to time. Okay, so when you've got transactions in your cash journals, you have to report them as well. Okay, it is important for an owner to know where the cash is coming from and where it all went. Okay, so that's how you'll be accountable for your money. Okay, so you need to know where your cash is coming from and where you are paying the money. Okay, now the statement of cash flows, this is your reporting statement. Okay, so the statement of cash flows is an accounting report which summarizes all the cash flows for a given period of time. Okay, for a given period of time means it could be for a month, it could be for a week, it could be for a fortnight. Okay, depending upon your business model. Okay, it is important to keep timeliness in mind when preparing any accounting report. Okay, so remember, you need to keep timeliness in mind. Okay, so if you're doing it weekly, make sure you're doing it weekly. If you're doing it monthly, make sure you're doing it monthly. Okay, and so forth. Now, how do you report cash flows? Okay, now when you prepare the cash receipts and cash payments journal, okay, the statement of cash flows should state each item along with the amount of cash involved. Okay, now it should then show total of cash receipts and cash payments. The report should then be completed as follows. Okay, I'm going to show you an example in your book. So excess of receipts over payments. So if that is $10,000, bank balance at the end, at the start of period, $2,000, and the bank balance at the end of period is $12,000. Okay, so let me go to the book quickly. Okay, so this is the statement of receipts and payment. This is 7.4 in your book. Okay, now this is Jack Rio Cabinet Maker statement of receipts and payments for month ending 30th of September 2023. Okay, so this was a question in your previous example. So this is the statement of receipts and payments. Okay, so cash receipts, cash payments and cash receipts. Now it also wants you to give the details on where you received the cash from. Okay, you received cash from sales. You sold kitchen cupboards, $1,940, bookshelves, $800, student desk, $1,360, capital contribution was $9,000, and loan from NAB was $3,000. GST collected $410. Okay, and the total cash receipts are $16,510. Okay, same as cash payments. Again, where did you make the payments? Timber. Okay, wages, drawings, purchase of assets, advertising, insurance, and GST paid. Okay, so make sure this is all the total from your cash receipts and cash payments journal. So cash payments journal, you'll have a timber as a column. So just the total from that column comes here. The total from wages column comes here. Total from drawings column comes here. And total from GST column comes here. So this is all information from your cash receipts and cash payments journal. Okay, now this is total cash receipts, this is total cash paid. Now which one is more? So cash receipts are more than cash payments. Okay, so excess of receipts over payments, minus, so subtracting these two. Okay, so you get positive 11,950 because receipts are more than payments. Okay, now bank balance at 1st September 2023 was nil. So the bank balance at the end of this month is going to be $11,950. Okay, now this was a question from here. So look, this is the cash payments journal. This is multi-column cash payments journal. This is the simple cash payments journal. We are going to concentrate on multiple cash payments at the moment. Okay, so the figures are from the total of here. So 1,040, 1,180, 850, 530, 730, and 230. Okay. Now the next thing that I want to show you was the GST. Okay. Now cash flows and the GST, a GST liability. The important thing to come out of a statement of receipts and payments is the GST position of the business. Okay. Consider the following from the cash receipts journal. Okay, so this is another example. This is not the one that we just did. This is another example. The GST received was $2,000. That comes from cash receipts journal. From cash payments journal, GST paid $1,200. So how much GST we still have to pay is $800 because we've collected this GST, we've paid this GST, we still have to pay $800. That is why it is called the GST liability. Okay. Okay. Again, the same deal here. So if the cash receipts journal GST receipt was $3,000 and we paid the GST as $4,200, which means we have paid excess GST than we are required to pay. Okay, so we will get a refund of $1,200. Okay, if our cash GST received is more than GST paid, then we have to make the payment. Okay, however, if our GST received is lesser than what we have already paid, we will get a refund of the balance amount. Okay, now there is another example I might do with you. Hang on. Okay, so the question that we did, the example in your book, so cash receipts GST collected was $410. So GST collected $410. Okay, GST paid was $230. Okay, so 410 minus 230, our GST liability is going to be $180. So minus 410 and 230, so we have to pay this balance GST to the ATO. Okay, hopefully that makes it clear. Okay, watch this again and again if you need to, and then I might take your questions on your post. Okay, bye bye.